Mic check. Oh, good, we're on. Hi, everyone. My name is Jordan French. I'll let you pile in. Blockchain just left us. FinTech is what's next. Kind of same in some ways. Blockchain, from my point of view, as a journalist, was born from financial technology broadly. Number of people already had a background in tech and looked to money as an opportunity to make some changes in the world. A bit about me. I'm a journalist based in New York. I'm on the editorial staff at thestreet.com. I'm also the executive editor and founder at Grit Daily News. You can see up on the board here. It covers all things brands. We're going to cover some really what I think is very exciting ground because it affects so many people, literally and practically everyone. Just as a nominal example, I'll give you all really quickly as you're, and come on in for those who are just joining us. This is a FinTech Summit. So just a nominal number. I was talking to Gabriel with MasterCard earlier, asked him, how many users do you have? And he said, countless billions, right? And likely a lot of you are affected by some of the work that they've done. And we're going to talk about that here today. So as all of you are crowding in, take every seat available that you can so you can make room for those who will be standing in the back. We do expect a full house on this ride. So on to Webit. First, they'll never get enough praise for what they do. For those of you who don't know, the two people mainly that I know behind Webit, now in its 11th year, are Plamen Rusev and equally Aniela Rusova, both based here and living here, both Bulgarians. If you could give them a big round of applause for some of the work that they've done. They're the reason why you're all here, to Plamen and Aniela. And one person who never gets enough thanks or praise is the AV guy, audio visual. So for the guy who's running the cameras, making sure this microphone is on so that you can hear me, making sure later when we do a Q&A, so we'll have some participation from the audience at both of at least my panels. Mish is in back running the audio. Mish. So round of applause for Mish. And last but not least, all of you in the audience should give yourselves credit for being here. It's an exercise in awareness to listen actively, learn, and coach others. Some of the folks up here on the stage are awesome experts. That doesn't mean that some of you aren't too. I do want to make sure that you're heard. Like I said earlier, we'll include a Q&A, at least in two of my panels. And so do raise your hands. I'll come down. We have a limited number of mics, but I'll come down. You'll be able to say your name and ask a question of our panelists. So without further delay, are we ready time-wise? Give me a little signal back there. Awesome. So to welcome my panel, if we could get a change of the screen and get some names up. Awesome. Again, for those of you just coming in now, this is the FinTech Summit following the Blockchain Summit. My name is Jordan French. I'm on the editorial staff at thestreet.com, a big financial publication based in New York, and also the founder and executive editor of Grit Daily News. With me to talk about the future of payments, some really exciting, awesome people. Some of you are using their services now. I'm going to start with Norris Koppel. Moniz, Norris, come on up. So great, hey, great to have you. And have a seat here. We'll go in some sort of consecutive order. Sami Zafar here is with us with Edgar Dunn Company. He's our data guy. Going to be sharing some awesome stats and insights with us. Knows everything about payment systems. Also with us is Gabriel Gitza, who I mentioned earlier. He's our resident bouncer. He's been doing a lot of biz dev for MasterCard. Thanks for joining us. And last but not least, also a lot of you are likely using his services. Mark Alexander Christ is with us with SumUp. You've probably seen his, if you want to. You can grab that seat there. It's all optics. It's all optics, Mark. But I'm going to jump right in. If you're just joining us, this is a FinTech Summit talking payment systems. You can see the names up on the board. And Sammy, because it's so broad, I'm gonna start with you at a really high level, and to set some foundation. It really seems like the world is changing. For those of us who kind of know and go way back, we were just touching paper at one point and perhaps bartering some goods. Where is this world of payments headed?
Yeah, just quickly and briefly, payments, as you said, was a very manual and a paper-driven business not too long ago. And we have seen...
It's on, just bring it up.
Okay. So we have seen over the last perhaps a couple of decades, things have changed quite radically. Payments have become extremely sort of interwoven with the fabric of our lives. You can't really do anything without having a payment instrument, making a payment somewhere a few times during the day. Payments used to be very expensive and slow. For example, in the US, it would take 7 days for a payment to reach from one bank account to another. In other advanced markets in those times, it would take 3 days minimum. Now you can do it instantly. So, and then payments, you had to go to a bank or you had to go somewhere or write a check to make a payment. It was almost an event that you had to be prepared for. Now you don't even know if a payment is taking place because you're only focused on doing what you want to do, which is that you are buying something online, you're paying for a ticket for an airline, or you are taking a taxi like Uber. You don't even know that a payment has happened behind the scenes, and if it didn't happen, you wouldn't be able to do what you were doing. So I think it's completely really coming to the forefront, but at the same time, efficiently in the background of our lives.
And certainly, Sammy, we might do away with payments altogether. You might walk out of a store with the goods without even having to make a transaction.
Yeah, at some point, some type of biometrics, they're already coming in certain payment stores. So you could have fingerprints, or you could have, as Jordan is saying, you could have just facial recognition. It happens on airports in some countries.
So we'll have a chance to unpack that later in the panel. It gives you a bit of a preview. Norris, you had a personal connection to this particular issue. If you could share that and how you ended up founding Moniz around this very issue.
Moniz is really basically a banking service that is built to serve this shift that is happening at the moment. So more people are more global than ever before. Majority of people have lived abroad at any given time. And Moniz is building a global banking service just to support individuals like this. It just reached 1 million customers. We're in 31 countries. And the problem was really that we're trying to solve is my own personal pain. I couldn't open a simple bank account when I moved between countries. So what we want to do is, when it comes to payments, for example, is that I have always wondered why are banks so inflexible. So if you want to get money to your bank account and out, you typically have just the ability to send it from another bank, domestically or internationally. And you have ability to deposit cash. I was wondering, why can't there be more? Why can't be other payment channels such as Venmos or PayPals and all these to be connected there as well, so you can put money in, put money out in a much easier way. So that's kind of apart from making things much faster and much more seamless.
And Norris, you're in London now, but you weren't always there. My understanding, you moved because of a relationship, but it was difficult to bring your money with you. Is that right?
That's very true. Yeah, it's my mother moved to England, so she invited me over for a holiday, and I decided to stay. And that was many years ago, 18 years ago.
Yeah, I think that's something that a lot of people can empathize with. Certainly, following family members.
I mean, people are getting married to foreigners. They move to another country. Life is not static. It's impossible to believe that. For example, everyone in this audience, if you're Bulgarian, that you're gonna remain in Bulgaria for the rest of your lives, right? You probably move, you work, and go to some other country, London, Germany, and so on. You need a new banking facility set up. It's painful. It's awfully slow, can be expensive. So why is that? So banks very clearly right now are not fit for the purpose anymore. Times have moved on, so it's not 1950 anymore. So we better sort of apply some pressure as fintechs and make things much more seamless than they have been historically.
Touching, and Mark, from another side, from the other side, the payment side, you saw some difficulties yourself. I think everyone in the audience can relate to using some change or perhaps some actual currency. Maybe they manned a family store at one point or another, and the only payment system that their customer had on them was a card. That's something that you witnessed yourself?
Hi, my name is Mark. I'm the founder of SumUp. And if Norris here is solving the problem of the bank or the issuing instrument, we actually do the other half of the value chain, which is basically card acceptance. And we basically focus on card acceptance for small merchants. We build a very inexpensive card reader. That's why cost is probably one of my biggest topics there. Maybe just a fun question. Anybody has seen one of those before? Show of hands. Okay, we launched in Bulgaria only a year and a half ago, so it's still relatively fresh. If you do the same in London, it's more like 60% of the room have paid at a SumUp terminal before. So we are in 31 countries, and we support 1 million plus merchants, and started back in 2012, when we were actually a payments company before this whole sexy fintech sector existed. So the problem you're asking for is very much because of the traditional infrastructure. Payment is very, very expensive as a tool. It's all built on face-to-face relations where somebody comes to your store, signs you up for a contract, collects all kind of KYC documents in paper. 4 weeks later, you're approved. Then somebody installs the terminal. Just by the pure amount of human interaction, this is an expensive solution, which to me, payment used to be a luxury product, and we are basically democratizing it and allowing small merchants to participate in what is the cashless future.
And it begs the question, Mark, if it's that simple as just having a perhaps 54-gram device like the one that you just showed, is there any reason why everyone who operates, especially retail stores, shouldn't be using something like SumUp or one of its peers?
It's not only every retail store, it should really be everybody. If you think about it, we believe, and I'm sure the person from MasterCard next to me is like going, exactly, that's what I want to see.
And by nodding up and down, he means yes,
yes,
not no.
Exactly. So 10% of every single population should accept card payments, because obviously the retail store is the most obvious ones, but it's also taxi drivers, much smaller merchants like your gardener, your babysitter, anybody that needs to accept payment today, like the busker on the street. If cash is disappearing, you need a tool to accept card payments, and that's basically the problem we're solving.
Yeah, certainly, and it begs the question, and this goes to you, Sammy, if there's some key or interesting statistical differences in habits, for example, when people use or pay through a card versus pay through fiat cash. Can you share on that?
Yeah, certainly younger people tend to use, they're sort of more accepting of new technology. So if you look at mobile payments, you look at anything that's come up that's changed the way we think, even new digital banking, it's always the younger people who actually tend to accept that more. But not necessarily. Again, you have people who are perhaps more tech savvy, or perhaps more, more concerned with convenience, more concerned with security. And literally, you don't have to have a qualification to say, I don't want to use cash. I mean, even in some of the world's poorest countries, where people can hardly read or write, when they were given the option to use mobile payments, they flocked to mobile payments because it just solved their problem. So if you look at Kenya now, mobile payments, no cash, mobile payments is like 35% of their GDP. So it really solves a pain point in our lives that we really don't want to be dealing with.
Yeah, certainly, and Gabriel, I want to go to you and pick up where Sammy just left off on that pain point. For those in the audience who don't know, you're at over 1 billion users, if not 2 billion, at cards users, not clients, which might be tens of thousands perhaps. At MasterCard, where is the growth from here?
growth in the payment business comes from all aspects, right? So it comes from new consumers which are getting cards. It comes from new merchants which are accepting cards thanks to things like the ones that SumUp does. It comes from new consumers which had cards, but they started using them for more than just taking up cash. It comes from people which are traveling more, and therefore they're using a more convenient payment method to pay for their purchases abroad. So it comes from all aspects of our industry. So if you read one of our quarterly shareholder reports, you will see there are a lot of points which are all growing, right? So everything from card-based to international travelers through usage, just everything keeps on growing, because it's just that kind of a method that is needed in the current world. And it's you have users across the spectrum regardless of age. Of course, different countries have different, let's say, have different structures of their user base, but it's an ever-growing and ever-diversifying range of users. So that's where the growth comes from.
Certainly, and I know that you're focused on business development here in Eastern Europe, but Sami mentioned Kenya. He mentioned a relatively low number, only about a third of accepted mobile payments. What are the objections that you've seen or gotten to 100% adoption?
Well, I think you have a mix of chicken and egg story. So you need to have places to use your payment instrument, but also people that have that. You have then in the mix, you have education in using those. And although the payment instruments are becoming easier and easier to use, if you're a new customer and you've been presented with an electronic payment instrument, not only cards, right, but let's say in general, if you've been presented with an electronic payment instrument that you're seeing for the first time, there's a certain learning curve to it, which is not only to learn how to use it, but learn to trust it. And that's also something which needs to happen. And then there's the millennia-old love for cash, right? So cash is still loved. And it is amazing that we're looking at European countries which are very advanced in terms of digital space. But when it comes to cash is still representing 80% of their payments. So this old love for cash dies hard. So it's one of the factors which are, let's say, acting not against, but let's say make it more difficult for digital payment instruments to grow.
Yeah, and certainly, Gabriel, to distill that, it sounds like habits have calcified. Speaking of habits, banks have them too. Norris, are banks part of the problem or solution? And I know there's many species of banks. I'm referring to sort of legacy institutions here.
Quick one on the cash as well. So we identified early on that we had a question as a business: do we want to be purely digital play, or do we want to support cash as well? And there is obviously digital payments are now going have exceeded cash, but there are places where people still want to use cash. So we have focused on cash, and in 40,000 locations in the UK alone, customers can go to a simple post office and do whatever cash-related transactions with them. And that's especially important, I think, that when banks are closing branches because it's just too costly to run in rural areas, then there is always a post office. And of course, then have banks focused on relationship with post offices in order to make things like cash access possible? Well, not enough, I would say. So in that way, banks are a little bit part of the problem, I would say. I mean, banks are trying hard, right? It's not. I'm not trying to sort of shoot down their ambitions here, but it's incredibly challenging to change and very costly as well. So if we're looking at banks spending billions on maintaining the existing infrastructure alone, how do you change this environment?
Well, that's the question to you. Let's actually drill down on that, because it's an important one. We're talking about momentum, inertia, calcified structures that are pushing things forward. But you just added that these are really expensive to operate. So why not exit from these sort of brick and mortar institutions, as you call them? Why not rely, as Moniz does, on a partnership with the post office? Why don't banks look in your direction and see that growth and copy it?
This is my personal opinion, but I think the shift is already kind of changing. So the shift is happening, and banks are much more cooperative than they were only a few years ago. So we could not exist if there were no banks. So because if we want to be truly global, it's kind of unfeasible to build everything ourselves in a global scale. So we have to partner with banks, and what we see is a shift that is happening, that more and more of customer-facing aspects is coming to us, and in many ways, the way we partner with banks is we kind of have them as a sort of a service provider underneath almost, so they become service banks more or less. Yeah.
Yeah, certainly, and taking a tack, just looking a bit forward on this, Sammy. Some of the things you've shared have been fascinating. Just before this panel, what can the audience expect next, besides the predictable, what appears from Gabriel, what appears from Mark, a somewhat predictable further adoption of mobile payments. But what do you see coming next?
Yeah, I think certainly payments are getting quicker and quicker, and they will continue to get quicker, because internationally payments are still slow, and there are a few fintechs that are actually helping payments go faster from one country to another. Domestically, in each country, they have systems, but internationally, they're still archaic, old systems that are being used. So people like MasterCard and Visa and others are actually trying to speed that up as well. So that's on the infrastructure, where payments are going to be faster, more accurate, and then people will be able to pay more conveniently. So right now, it's easy to just tap with your card, or tap with your phone, or tap with your for your Apple Watch. But as you said, that payments for certain areas will become even more invisible. So like Amazon is experimenting in the US, you can just walk out of a store, and because of facial recognition, you will be charged the amount of goods that you've taken out of the store. So that's one area. Biometrics is another key area. People are trying, so it could be fingerprints, it could be your voice, it could be your iris or whatever, but it's not like you'll have to stare at something to give your iris scan. It'll be very, very quick and very easy to use.
And these sound, perhaps a bit advanced, or maybe I should say there's some level of sophisticated technology that we have to implement, Sammy. So from a very practical standpoint, if someone is operating a small business, or especially in retail, how feasible is it today to implement, for example, a biometric scan? It sounds wonderful to be able to let customers walk out without a payment.
You see, payment is a network business, so you've got everybody to go together, because you need people. If you have something new, you need people on the other side who actually can accept payment from that, new thing. But I think for small retailers who are perhaps selling something online, they need to make sure that they don't get their payments declined. So I have a valid card. I want to buy something online, and what happens is sometimes, because of the old systems that banks use and other payment companies use, my card is declined, or any other payment instrument I'm using, for no valid reason. So I think the real benefit would be to actually improve this, so that you don't have any false declines. And only the fraudsters get declined, but you, as a valid customer, still can take your payment through.
It sounds like a big issue, and if you could also, Sammy, because you have data, I'll put you on the spot here. How often is that an issue? Decline charges.
It's quite a big issue, because fraud is a big issue. And I think we had a presentation before. We worked for an airline in Africa. 50% of their online sales were fraud. So every second ticket that customers were buying was fraudulent. So what the risk companies do, they become very careful. So if there is a slight issue with your payment, they would reject it. So even large companies, even big guys, are losing about 5 to 6% of their checkout basket because of false positives, because of declines that shouldn't have taken place. And if they don't happen, then your sales are actually positively impacted.
Right, certainly. And that's a striking number to be around a halfway mark. It's much higher than I think, at least certainly I thought. You mentioned costs, and Mark, you mentioned that earlier. Before we do that, just a really quick note. For those of you in the back, there are a few seats remaining in the front. If you want to occupy them, just sort of make your way down the center aisle. Yep, just like that. and there's a couple seats here you can fill in. I know there's practically a full house here. There's at least 2 or 4 in the front. So come make your way down. Mark, where I just left off, earlier you really briefly touched on cost, and I think there's not a lot of visibility. I do think the audience, and at least I find this interesting, it's not cheap to accept cards. It's perhaps one of the reasons that we see, a minimum requirement of €5 or $5 or a certain number of EVA in order to use a card. What's going on there? Can you unpack that for us?
It used to be very expensive because of the structure of the inherent industry, but these days it's super affordable. You basically buy my card reader for $20, and then you just pay me 2% if and when you use it. So if you're a taxi driver here in Sofia, where we see quite some traction the last couple of months, you probably do something like 400 lev a month. That's like €200 of volume. So you pay me like €2 in order to accept those payments. That's not expensive. It's also, from a technological standpoint, it's super, super easy. So you don't need to have a doctoral degree to accept card payments or implement the solution. So really these days, there's no excuse to accept card payments anymore. It's not technology, it's not structure. I think the only reason why you don't want to accept card payments is all criminal reasons like tax evasion, money laundering, and all of those things. But besides that, for a proper merchant, there's really no excuse.
But we don't judge. Right, Mark?
Yeah.
On that note with friction, Gabriel, I want to go to you on this. Are you a little bit worried about what Mark is doing? I'm going to start with an assumption and turn it into a question, and that is, doesn't MasterCard make some pretty fat margins off of that transaction cost for accepting a card?
It's a very ugly question to ask. The answer is no. Right? So there are costs in handling payments, right? There's a global network which handles everything from the technology of making that money flow from one point to another, but also the guarantee of that payment, right? So part of what a scheme does is to guarantee to the merchant that they get the money, right? So there are some costs involved there. I'm not going to go into the details of that, partly because I'm not so familiar with all of those things. But as Mark said, I think that when it comes to cost, there's no real reason for merchants not to accept card payments today. And I think, on one hand, this is valid for what we call the card-present merchants or the face-to-face merchants, where I think most of the valid businesses would accept cards, because now there are many customers who want to use their card to make a payment there, so they have to serve. There are still many of them, especially in the small merchant and micro merchant space, where card payments may not be available yet. But then the reverse of that is that, in general, those businesses represent a fairly small percentage of the retail. Nevertheless, an important part, but still a fairly small percentage of that. Our own strategy is to transform every device into a payment device. So, and I think we've had a few cooperations with SumUp on that as well, to basically enable your phone to accept payments. We're not fully there yet, but we are on the way to get there. So it is even easier now to do that. And then when it comes to e-commerce, which is the fastest growing part of the retail today, there's a host of new technologies which are going to make that not only quicker in terms of your checkout process, but also more seamless for the consumer in a more secure way. So when it comes to seamless payments, if they're seamless but the consumer doesn't get the perception of security, then they're seamless for nothing, right? So what is happening now is to add this element of new perception over security, which is going to enable those merchants to sell more. And I think in online, the question of the cost of card payments is even less relevant, because there are many merchants out there which are accepting PayPal, right? And PayPal is an expensive payment method, but they convert well. So from 100 customers which are checking out with PayPal, let's say 88% are succeeding. The others don't for various reasons, right? So, and the merchants are happy to pay that fee, because the sale is so much more streamlined in online versus offline, that if you get a payment method which converts well, it's actually worth the cost. If you compare the regular card acceptance cost with PayPal, you'll see there's a huge difference. In some cases, even more than double the cost. And still merchants but they would accept PayPal because it converts well. So the cost itself is not a reason not to accept payments. There is something which Mark said, which is indeed happening. There are merchants which would not accept electronic payments because they want to conceal revenues. We're not judging, but we cannot pretend that we're not seeing that, right? So
certainly, and just to distill that a bit, it sounds like there's some other hands in the cookie jar, so to speak. PayPal is one that you mentioned, and they're taking a cut of the sort of top line fee as well.
well, if you take e-commerce for argument's sake, right? There are many hands in the jar, right? Because what the merchant does, they take care of the stocks, they take care of their presentment platform. But when you're getting into the checkout, they're usually a shopping cart provider, which is handling the way the products are added to it. They're reconciled, they're sent to payment on various payment methods, because there are so many alternative payment methods out there. Then you have security companies, which are ensuring that everything happening there is secure and there's no risk for defrauding the merchant in the merchant domain. Then there's payment systems, there's whatever, so loyalty systems. So there are many things. What matters more is what's the success of that business, right? Is it profitable? Is it something that the consumers want to buy and they want to use? And if the answer is yes, then business is going to happen. If the answer is no because of some things which are not going well, like Sami was saying, your payment is declined, then there's a problem, right?
Certainly, and it's also certainly indisputable that MasterCard has played a part in increasing, the number of transactions that could happen and that velocity. Really quickly, I want to go to Mark and then to Sami. Mark, you had
I have a 20-second story, because really talking about the cost of payment is the completely wrong discussion to be had. Because I like your story with PayPal doing 2 or 3% more. We are at the point of sale, so I have a much more telling example. Do you know the company Tupperware? The ones that pay.
Thanks for the question.
You invite me to your home, and then I'm having dinner
to bake cookies.
To bake cookies, and then at the end you send me home with a number of plastic boxes. They're a great partner of ours, and because they have like thousands of Tupperware parties going on every night, they realized that if you have a card reader at your Tupperware party, you sell 60% more plastic boxes than if you don't. That means for you, Jordan, that is in the business of selling plastic boxes and makes a livelihood of these Tupperware parties, all of a sudden you have 60% more money in your pocket. Plus, as a company overall, the value of the company just increased by 60% just because they have a card reader on there. And if you're able to basically increase your revenue by 60%, who cares about the 2% cost in that?
Can I just very quickly add, is that I took a taxi from the airport and I didn't have any local currencies. And I said, can I use my card? And the taxi driver, out of the blue, pulled out SumUp device. And I was very happy to pay. Obviously he had to pay the fee, which he kindly passed on to me, and add some 20% on top of whatever. But I was so happy, because otherwise it would have meant that I need to go to an ATM, and in the middle of the night it wasn't great. So I would encourage not to forget the convenience factor as well.
And then,
Thank you.
Sami, you had one more thing to add, and then we'll go to our Q&A.
Yeah, no, I was just going to say, so we were talking about the cost of providing payments is going down because of new technology, but cost to the user has been going down, and regulators have been trying to push that down by lowering what is called the interchange fee, which the merchant's bank pays to the issuer's bank. But we'll not get there because that's another can of worms. But that was the intention, to make it cheaper for consumers. And also, if you look at generally payments, domestic payments within a country, bank account to bank account is free in most countries. And internationally now, if you saw 10 years ago, even now, some banks would charge you $25 to send payment from the US to, Mexico. But if you go to one of the new fintechs, the payment would be much faster and far cheaper. So that actually the consumer is winning all across in these payments because of these new technologies.
Yeah, it certainly sounds like an exercise in awareness and perhaps even evangelization. The sort of SumUps and Monices of the world to get out there and more market themselves. I promised y'all a Q&A. I'm going to come down. Just raise your hand if you do have a question for awesome panelists. It looks like we'll definitely have at least time for a couple of questions for them to answer. So hands up if you have a question, and I'll start with you. Just be sure to say your name first, and I'll hand you the mic.
Hi, I'm Rebecca. I'm a master's student at IE Business School here doing a report, and I have a question about the unbanked population of the world. We see that far more people in developing countries are unbanked, and especially women are unbanked in many of these nations. So what do you see as the possibility for fintech, for social innovation, and bringing some of these services to people who really need it?
Who is gonna? I can have a go. So Mastercard probably can't speak for themselves, but it's very high in Mastercard's agenda. So it is in ours, and actually the foundation of this business is very much built on the financial inclusion. And although I had a good salary, I moved to another country. I couldn't open a simple bank account. Took me 2 years to build up enough credit history to get a very high cost credit card. And I had salary and everything. So, and if me here in Western European Union, I'm excluded, and there are hundreds of millions of people in European Union alone, then there is. If we look at it on a global scale, there was 2 billion people unbanked when I started this business. Right now it's what 1.5 or a little bit less. So actually good things are happening. Mastercard is very much part of the solution, but we also believe that we are giving it our best shot. But right now we are focused most on Western world and making sure that those who don't need to be excluded, they can easily access services, and even people, for example, who have no formal address proof, or if you live in a hotel and so on, how do you access financial services? We make this possible, so it's very much in our agenda.
And I think many parts of the population are just excluded because of the structure of the industry. So by having technology like Moniz does, it's much easier to include people. For example, we are also live in Brazil. We're in our small merchant segment. We probably have like 40% of the people unbanked. So on top of a card reader, we also give them a card and thereby have them have an account. And we see how these people then flourish, because by going from I have cash under my pillow to I have an account that tracks my sales, makes me manage my business better, and so on, you just help them much more on the inclusion side.
Maybe just one thing to add here. So the topic of financial exclusion is very broad, and it has so many facets. One of them is the way the money which are flowing towards the people are actually managed. And you will see that in a lot of cases, those money are handled in cash with a lot of corruption around it, and a lot of money lost either due to misbehaviors, but also due to the cost involved in cash. And one of the areas that the industry is focusing on is to get those cash flows electronified, somehow digitized. You will see that in many countries, people don't have IDs, right? So to get to a bank account, you need to have some form of identification. So that's something where the governments can play a part. And there are examples of such, and they are quite successful. We are starting this part of it. And we are on a very ambitious plan to get, I think, 500 million customers enrolled in financial services. I think up to 2020, this was a plan started like 3 years ago, and I think that's going to be met. But it is very diverse. The country that I'm coming from, they say like 45% of the people are unbanked, and that's not because they don't have IDs, not because there are no banks, but because they don't care. Right, so there are, but then they get a lot of support from the government. There's social welfare towards them. If the government would take steps to reduce their cash handling costs by digitizing those payments, then at least this minimal financial inclusion, which is like a basic banking service, not even banking, right? We don't even have to go there. It's like a basic financial service that would be achieved. These are things which are happening, sometimes faster, sometimes slower, but yeah.
Just a quick point that there are loads we all know about M-Pesa and innovation in mobile payments in developing countries with unbanked populations. But there are new things happening as well. So for example, there is a payment service called direct carrier billing. So you can actually have a payment charged to your phone bill or have it deducted from your prepaid balance. So in Africa, there are companies that are actually offering you medical advice and legal advice. If you're living in a village somewhere in remote Egypt, you can have 3 interviews, 3 discussions with a doctor in the city, and you pay for that by deducting it from your airtime balance on your phone. So there are lots of these new innovations taking place that will help the unbanked.
In that case, sounds like phone minutes used as a currency there. Really good question on the underbanked and unbanked. We definitely have time for at least one more question. If I could see a hand in the air, I'll come right over swiftly. And just say your name before your question. Someone had a hand up over here. That was you. You have a question.
Turn the lights on.
Is here fine? Yeah, okay, so my name is Atanas. I'm sorry if the question might offend you, but I didn't hear anything about blockchain and the future of blockchain with your companies. You were talking about, at least it sounded to me that you were talking about technologies that we already have and we are trying to improve a little bit. So for example, you were talking about moving from credit cards to telephone payments. And at the same time, we have the blockchain, which is probably a huge opportunity, and you didn't talk much about it. So can you share what are the plans for your companies?
Mark, you want to take that one?
I think the realities might disappoint you, but the problem is not really the technology. The problem are the merchants and the customers, and I'm a big fan of blockchain. I'm sure blockchain will have a big piece in the whole payments game, but I don't think that's the one solving the problem. The problem is really educating 55% of the Romanians that they need a bank account and their life will be better with a bank account, or every merchant to accept card payments. I think this is the real challenge there. And whether you solve this with a MasterCard network, a blockchain, or a top-up balance is really not going to make a difference.
Yeah, I mean, I personally think blockchain is going to make a huge impact, if nothing else, but on the underlying infrastructure that banks use to process payments. So banking is still very archaic. You need to clear and settle transactions when you make payments to each other. What blockchain and cryptocurrencies will do one day, not right now, is to take the process of settlement, which is like an accounting process, out of the whole thing and make it cheaper and quicker.
And Gabriel, that begs a question. As you sell,
It's like a ticking bomb or something.
as you're out doing business development, are you getting the ask, hey, why don't we just use a cryptocurrency, or is that not happening?
It does pop up. It doesn't pop up very often, though, because I'm with Mark here. I don't think that technology of retail payments is the problem. I don't believe blockchain is the technology to handle retail payments. We are having our own blockchain, and we are developing it for certain payment services. Retail payment services, though, not one of them. Maybe cross-border business-to-business payments. Retail is just not fast enough, and it's just too expensive to handle. So while cryptocurrencies are a topic that I would not go into at this moment.
Yeah, it certainly sounds like some sobriety or at least a dose of reality from boots on the ground. That's all the time that we have for this panel. Again, I'm Jordan French. Please join me in thanking our awesome panelists. Gabriel Gita with MasterCard here, Mark Christ with SumUp. We had Sammy Zafar with Edgar Dunn and Company, and last but not least,